Does anybody remember COVID-19? Does anybody remember the pandemic shutdown of 2020 into 2021 into 2022? Tens of millions of people had tax problems, and millions of those people didn't file tax returns. Well, guess what? The IRS is coming after you now.
What are they looking at specifically?
Well, first of all, they tell us that they're only going after high income. Tell us that they've started this non-filer initiative where they're specifically going after high income non-filers. But the problem is with the definition of high income non-filers.
IRS thinks everyone in the country is a high income individual, don't they?
That's exactly right. If you look at the IRS's Internal Revenue Manual, they define a high income taxpayer, anybody making more than $100,000 a year. Now, with the Inflation Adjustment Act, they tell us that, well, they're only going after people making more than $400,000 a year. It's really a false number because the $400,000 comes from the Biden administration with their plan to support the Inflation Adjustment Act, which gave the IRS the $80 billion in additional funding. They used that $400,000 number arbitrarily to sell the American people on the idea that they should vote for this proposal, support this proposal, because they would only go after rich people and they would leave the lower income people alone. That's what was driving it, is this false idea that the IRS is only going after rich people. You know, you would have to agree that somebody making more than 400 grand a year is probably pretty, you know, that's high income.
They're doing okay.
That's pretty good income, no doubt about that. Put it this way, they're in the top 1% of income. And they tried to tell us that nobody that was under $400,000 was going to see any increased enforcement compared to historical standards, all right, if the IRS got their $80 billion. Fact of the matter is, Joshua, and these are numbers that are verified by the Treasury Inspector General for Tax Administration, more than 95% of all of the non-filers in the United States earn less than $100,000 a year. And do you think for 1 minute the IRS is not going to go after those people, that they're going to go after only 2 or 3% of the taxpayers out there that don't happen to be filing tax returns? Anybody who believes that is just dreaming.
Well, it sounds to me like the IRS goes after the people who can't afford to pay to fight them when they go after them. So they don't want to go after the actual high income people because it expends more resources than it's worth, and there's not as many of them.
Well, there's not as many of them, and you're exactly right. The high income people fight back. They have the hotshot lawyers and accountants that are necessary to fight back. The lower income people don't know how to fight back typically. So when the IRS challenges folks that haven't filed tax returns, you know, people panic and they go into hiding. And what happens then is the IRS creates what they call a substitute for return, right? SFRs, we say in the trade. It could be some guy sitting at a chair looking up at the stars and scratching his chin and saying to himself, Josh made $250,000 last year. We're going to base the income tax on that and send you a bill for it. And that's what they do. That's essentially what a substitute for return is.
If the Fed boys are watching, I definitely did not make $250,000 last year. That is a made up number, so don't look into that.
And furthermore, it is true, is it not, that you have filed all your taxes?
I filed all of my returns. I have all of them, all my returns. I have a very good accountant. Thank you very much. Don't look into that. Is there something else that we need to be concerned about when they're going after the lower income individuals?
Well, whenever we're talking about unfiled tax returns, you're always facing the risk of the substitute for return. So the best advice is to get the return prepared as best you can. Don't stay into hiding if you're a non-filer. The IRS has a program that's available that allows you to step up, file the tax returns, get the delinquency cured, and make arrangements to pay the liability, which of course is the factor that drives most of the non-filing in the first place, is that people don't have the money to pay the tax. I don't have the money to pay the tax. I'm not going to file a tax return. And then 1 year leads to the next, leads to the next. Pretty soon we've got this whole string.
And when you have a problem, how far back do you need to file your delinquent return?
Good news and bad with that answer. The bad news first is that there's no statute of limitations on the IRS's ability to go back and assess a tax liability against you if you didn't file a tax return. So they can go back 3 years, they can go back 5 years, they could go back 15 years. Theoretically, they could go back to 1913, which is the birth of the modern income tax. Theoretically, right? Because there's no statute of limitations on their ability to make that assessment.
What is the precedent for how far back they've gone in your experience?
And that leads to the good news. The IRS has a written policy regarding how far back they will go. Even though they can go back indefinitely, they recognize the futility of doing that in the vast majority of cases. So the rule is they typically will not go back more than 6 years to chase delinquent tax returns. So let's put this in perspective. 2023 is the current year, right? That's the return that has to be filed right now. So if you look back 6 years, you got 2022, 21, 20, 19, 18, 17, right? So that would be the 6 year period of time that somebody's somebody's got to be concerned about. Beyond 2017, earlier than 2017, you don't have an obligation to file that return because the IRS's written policy typically will not go back behind that. Now, there are exceptions to that. The exceptions, there's a few of them, and
Flagrant
they don't apply to most
abuses
people.
and years of non-filing. I'm sure they're going to start looking and asking questions, especially for a high income person.
Yeah, you hit the nail right on the head. If you're a high income, I mean, a legitimately high income taxpayer to the point where you've got 6 figures of taxable income, 6 years of tax liability, 6 figures rather of tax liability, the IRS probably will go back more than 6 years. If you've got income from an illegal source, if you're running a drug smuggling operation or a prostitution ring, they're going to go back more than 6 years. If you're a high profile tax protester, somebody that's encouraged others to not file tax returns and not pay taxes, then they will go back more than 6 years. But for Jane and Joe American, just a typical individual, that 6-year window is what I've always used in my career. I've used it for over 40 years, and that is typically where the IRS will stop.
Well, what does that say about the people who say the rich people pay no taxes and they have a shelter of some kind because, if you've got enough money, then you don't have to pay your taxes. You can do all this stuff to not pay taxes and the IRS won't pay attention to you.
Well, it's just nonsense. The fact of the matter is rich people pay all of the taxes. It's not true that rich people pay no taxes. Top 1% of income earners in the United States pay roughly 15% of all the taxes that are paid, income taxes. The top 10% of income earners, roughly 50% of the tax liability is paid. So the lower income, bottom 50%, they pay the smallest portion of taxes that there is. So high income earners pay all of the taxes.
ERCs and all the kickbacks and the stimmies and all they gave, so a lot of these people are actually getting money back. So.
Well, the low income taxpayers are getting money back. That's exactly right. There's no question about that. You got to remember, people need to focus on the fact that we've got a graduated income tax system, which means that the more money you earn, not only more tax you pay, but a higher rate of tax, right? The lowest tax bracket is 10%. The highest tax bracket is 37.5%. And the Biden administration is looking to push that back up to 39.5%. Graduated income tax operates such that the more money you make, the greater percentage of tax you pay on that income. Also, the other thing that the vast majority of people don't realize is that deductions, credits, exemptions, all these various benefits that people look at and say, oh, those are loopholes. People taking advantage of loopholes. All of those things phase out for high income taxpayers. So the more money you make, the less capable you are of taking advantage of these things that are built into the law designed to help low income people not pay as much tax.
Astounding. Constantly amazed at people's ability to get that concept wrong about our tax system.
What it betrays is a fundamental misunderstanding, not just the nuances, but a fundamental misunderstanding of our tax laws and how the system works, right? People have no clue how this tax system works. In fact,
tax is something that should be in every school system, and yet they deliberately keep it obfuscated.
Oh, no question about it. In my latest book, Dan Pilla's Small Business Tax Guide, in the introduction to that book, I talk about the level of ignorance that people have about the requirements to comply with various tax laws. And very, very few people have any understanding of what the level of burdens are that are put on small businesses in particular. Individuals, yes, but small businesses in particular. And the Government Accountability Office, the GAO, did a study one time that revealed that there were as many as 200 affirmative obligations that were put on the backs of businesses, that, hoops they have to jump through every year to stay compliant. Most people can't even name 20 of them, never mind 200. And a lot of people have a difficult time naming 5 things that they have to do to stay compliant.
I certainly couldn't name 5 things. I've got a guy for that.
I don't got to worry about nothing. I got a guy over here. But the fact of the matter is, you're still the one that signs the tax. So you're still the one that's obligated to answer to the IRS if there's something wrong. Now, it is true that if you rely in good faith on the advice of counsel, you provide full information to your counsel, full disclosure of all the facts and circumstances of your case, and your counsel gives you advice in the form of a tax return that says do this and do that, and it turns out to be wrong. You still owe the tax, but you can avoid penalties based on good faith reliance. But there has to be full disclosure on your part to a qualified tax professional.
What should someone do if they're facing all kinds of penalties and they need help navigating through all of those penalties?
Well, the first thing you need to understand is that every penalty provision of the tax code has a reasonable cause provision, which means that if you acted in good faith based on a reasonable cause for your actions and you didn't deliberately disregard IRS rules and regulations, you didn't deliberately, overtly avoid your responsibilities, then the penalties do not apply. The penalties apply to somebody who's a deliberate tax cheater who makes an overt decision that they're not going to do what the law requires them to do, right? So the penalties can be managed. Book, The IRS Problem Solver. I got 2 chapters in that book deal with penalties. In my most recent book, which I mentioned already, Dan Pilla's Small Business Tax Guide, there is a chapter in that book that deals specifically with penalties. People need to realize that the IRS will cancel the penalties when you can demonstrate this good faith element that I talked about here. But the burden of proof is on the taxpayer. You must prove the penalties don't apply. They don't have to prove the penalties do apply.
That's backwards compared to the standard burden of proof in every law system. They got to prove you did it wrong in every other system of governance. But when it comes to giving them the money, it's give us the money first and then prove that you owe less later.
It turns American jurisprudence on its head. There's no question about that. And that is one of the ways that the federal income tax gets sideways with the Constitution, no doubt about that. All right, so I want to encourage anybody that's got any tax problems to go to TaxHelpOnline.com, TaxHelpOnline.com. Go now. You buy any book off my website at any price point, you get a free 15-minute consultation directly with me. So go to the website, TaxHelpOnline.com, select your book, order it, read the book, write down your questions, and get on my appointment schedule. The instructions will show you how to do that. Get on my appointment schedule for your free 15-minute conference, and I'll walk you right through what you need to do. If you are a tax return non-filer, don't panic, but now is the time to get that straightened out. Don't wait until the IRS is hitting you with tax bills and liens and levies and seizures. Don't wait for that to happen. Take action now.